All right, let's talk about NovoCure, ticker NVCR. Their third quarter earnings just hit the wire, and frankly, it's a real head-scratcher. The company put out a report that sent the stock on an absolute roller coaster, and we're going to break down exactly what happened. So here's the puzzle, right? NovoCure comes out with a solid beat on both revenue and earnings. The stock rallies in the pre-market, everything looks great. But then, by the end of the day, poof, all that excitement just evaporated and the stock finished down. So the big question is, why? Let's dig in.
Okay, first things first. Let's look at the headline results that lit that initial fire. Because, on the surface, this was a really strong quarter that blew past what Wall Street was expecting.
Check this out. Revenue came in at $167.2 million. The consensus was hoping for maybe $159 million, so a really nice beat there. And the bottom line? Even better. A loss of 33 cents per share sounds bad, but everyone was bracing for a 42-cent loss. I mean, that's a massive positive surprise. This is exactly the kind of report that should have fueled a great day for the stock.
So where did all this good news come from? Well, it's all about their bread and butter, their core business, treating that aggressive brain cancer, glioblastoma, or GBM. It's the foundation of the company, and it is still performing really, really well.
And this number right here, this says it all. Over 4,400 active patients. That's up a solid 8% from this time last year. It's simple. More patients means more revenue. This is the engine that keeps the whole thing humming along.
And if you dig in a little deeper, a lot of this growth is coming from overseas. I mean, France is up a staggering 27%. Japan and Germany are pulling their weight too, and now they're getting Spain online, which opens up a whole new market. This is just smart, steady execution.
Okay, so if the core business is firing on all cylinders, what gives? Why did the stock completely fall apart? Well, this is where the story takes a sharp turn, and it all comes down to the big, new, and highly anticipated launch in non-small cell lung cancer, or NSCLC. And look, you don't have to take our word for it. Management was surprisingly blunt about this on the call. The executive chairman himself came right out and said the launch has been harder than we expected. When the chairman says something like that, Wall Street listens, and it gets pretty nervous.
And here is the number that really tells the tale. Just 100. 100 total lung cancer patients on the therapy. Now remember that 4,400 number for GBM? You can see right away, it's not even close. The ramp up here is happening at a snail's pace, way slower than anyone hoped for.
So why is it so tough? Well, management laid out a few key problems. First, this is a very, very sick group of patients. Second, it's an incredibly crowded field with tons of new drugs competing for attention. Third, you're asking oncologists who prescribe pills and IVs to suddenly start prescribing a wearable device. And to top it all off, patients are only on the therapy for about 4 months, compared to 10 for GBM. That just makes the whole business case a lot trickier.
And yep, all those struggles, they are hitting the financials. Hard. Gross margin got squeezed, dropping 4 percentage points down to 73%. Why? Well, they're paying for some lung cancer patients before insurance kicks in, plus there are other costs. That squeeze on the margin is a direct hit to their path to actually making a profit. But okay, let's pump the brakes on the negativity for a second. Because for the true believers, the long-term investors, the story isn't dead. It's just changing. It's becoming less about this one rocky launch and more about the bigger picture. NovoCure evolving into a true platform company.
And here is that grand vision from management. They want to go from being the brain cancer device company to being a platform powerhouse with 4, count them, 4 approved cancer treatments by the end of 2026. This is the big promise that's keeping long-term investors watching so closely. And this right here is why everyone is still paying attention. The Catalyst Roadmap. Over the next 3 quarters, you've got a key submission for brain metastases. And then, boom, boom. 2 huge data readouts back-to-back for pancreatic cancer and then another for GBM. Any one of these could completely rewrite the narrative and send the stock soaring. All right, let's put it all together. We've got the good, a rock-solid core business. The bad, a really tough lung cancer launch. And the potential, this huge pipeline just around the corner. So now it's time for our take. The next call. Which brings us to the one question every investor's asking after a confusing day like this one. So, what's the play? What's the trade? Here's what we're thinking.
For next quarter, Q4, we expect revenue to squeak by the consensus, maybe around $165 million, with a similar small beat on earnings. But, and this is a big but, we think the stock is stuck in neutral. It's going to be range-bound until one of those big catalyst hits. For that reason, our rating is market perform. The stock just feels perfectly balanced right now between the solid foundation and the very real risks.
But if you're looking for a specific idea, here's one to think about. You could go long into that pancreatic cancer data release in Q1. It has massive upside potential, but you'd absolutely want to hedge it with protective puts. Think of it like buying insurance against the stock dropping, just in case that data is a bust or the next earnings report shows even more weakness in lung cancer. It's a way to play for the win while respecting the very real risks.
And as always, please remember, this is not financial advice.